Did you know that the majority of ordinary investors would eventually find Tesla stock to be too costly? That's according to celebrity investor Cathie Wood. During the decline, large companies such as Wood's Ark Invest have started purchasing Tesla shares. Don't miss this one. You would want to take Wood's advice to heart. The share price of Tesla is currently $191.30. With this price tag, more ordinary investors can participate in the premier EV company. Experts like Cathie Wood predict that Tesla stock will rise for a very long time. A number of actively managed exchange-traded funds are managed by the American investment management company Ark Invest. Investors looking for long-term development in the public markets might find investment solutions from Ark Invest, which only focuses on disruptive innovation. The business is watching Tesla since it also makes investments in cutting-edge fields like genomics and self-driving automobiles. The company managed $50 billion in assets as of February 2021. Head of Ark Invest and CIO Cathie Wood is an American investor that Forbes lists as a star stock picker. Because of her exceptional persuasiveness when making investment arguments, Cathie Wood is frequently referred to as the most underappreciated investor in the game. However, she also has the verified outcomes to support her remarkably astute assertions. Ark Invest purchased Tesla shares twice. In October alone, first following the company's release of Q3 production and delivery figures in early October, and then following the company's Q3 results call in mid-October. Wood bought 132,000 Tesla shares at the beginning of October after the company disclosed a delivery error. Wood purchased an additional 66,190 Tesla shares in October after the company released its delivery and production figures through a press release for the second time. This was done after the stock dropped in response to Tesla's Q3 earnings. When the price dips, it seems that Wood and her company, Ark Invest, are buying frenzy. This is presumably due to Wood's belief that Tesla stock would fly to unprecedented heights in the coming years, thus she is seizing the opportunity to purchase further stock at a discount. Ark has projected a value per share of $3,000 in 2025 in its open-source Tesla model for 2021. Since then, though, they have modified this in light of significant modifications such as estimations of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and a one-year advance in the prediction to 2026. Ark claims that Tesla's potential robo-taxi business line is a major factor, accounting for over half of projected EBITDA and 60% of expected value in 2026 across the simulation set. Although at significantly lower margins than the revenue from robo-taxis, they anticipate that in 2026, electric vehicles would account for 57% of the company's total revenue. Due to Ark's growing confidence in Tesla's potential for fully autonomous driving, they have revised the model to include the robo-taxi industry. Despite their earlier predictions that Tesla would never be able to introduce autonomous ride-hailing, they have since changed their minds in response to recent encouraging developments from the company and now project that it will come in 2026, 4 years later than Musk had anticipated. Additionally, they predict that Tesla will begin offering autonomous ride-hailing services in 2024. Nevertheless, in 9% of their model scenarios, Tesla fails to launch robo-taxis within the allotted 5 years. The projected financial results for Tesla are subject to the year of introduction, provided that robo-taxi commercializes within the projected window. Additionally, Tesla's capital efficiency is increased by Ark Invest's upgraded model, when the Model 3 was ramping up in 2017. Tesla's capital investment per incremental unit of capacity was $84,000. By the time the 2017 model was released, that number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 and $8,000 for each additional unit of capacity by 2020-25. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. In 2026, Ark projects that Tesla's share price will reach $4,600. According to the most recent model revisions, Tesla's 2026 market value may be between $2,900 and $5,800 per share, depending on the bull and bear scenarios. If this occurs, only institutional investors will be able to purchase Tesla shares, making it unaffordable for the average American. Institutional investors invest other people's money on their behalf rather than using their own. Conversely, retail investors make their own investments, frequently through retirement or brokerage accounts. The Ark Invest team also mentioned that they believe that by 2026, Tesla's robotaxi will have completely changed the industry. The expected value in the event that Tesla introduces robotaxis successfully is the mean of the 1 million simulation runs. When Tesla eventually introduces robotaxis is a year that. Simulations are quite sensitive to. Tesla launches a vertically integrated human-driven ride-hailing service, but does not establish a robo-taxi network in the majority of Ark's lowest price per share scenarios. In some situations, however, Tesla does not launch either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, Ark has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. Ark makes the assumption that Tesla's human-driven ride-hailing vehicles will eventually make the switch to the autonomous ride-hailing network in the event that the company introduces a human-driven ride-hailing service and solves for completely autonomous driving. While working towards complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robotaxi service in the allotted 5 years. However, in the numerous price per share possibilities that Ark presents, Tesla introduces a robotaxi network within the next 2 to 3 years. According to a published article, Ark Invest feels that their Tesla model is methodologically cautious, even if it is adjusted to our expectation for 2026. In 2026, we predict that Tesla stock will behave more like that of an established business than a fast-growing one. Wood's reputation as a Tesla bull has never changed. Before making an investment in the company's stocks or bonds, investment firms like Ark Invest gave them considerable thought. Additionally taken into account are the stock market and economy. Investors and analysts are keeping a close eye on Tesla shares. Like Wood, Tesla stocks have been moving a lot. But investors are still clamoring to purchase Tesla stock because they believe the firm has a lot of potential for the future. Many people think Tesla will accomplish amazing things in the future. Given this, a lot of investors believe Tesla has enormous potential, especially considering that it was the first to successfully launch electric cars into the market. Ark Invest thinks Tesla will stay at the top of the electric car market, particularly if it's the first company in the US to successfully implement autonomous driving. According to Cathie Wood, we're beginning to believe that not only will Tesla take the biggest share of the electric vehicle market, we also believe that it could take 20 to 25% share of the total auto market in 5 years. That's by 2026. According to VW Group, which claims Tesla is the industry standard in that area, Tesla's manufacturing process is also the envy of its biggest rivals. Lower cost and higher profit are the results of a more efficient production process. Furthermore, as of right now, Tesla has the best gross profit margin of any automaker. It was recorded at 27.9% during the most recent 2022 third quarter. Additionally, Tesla is a pioneer in the field of self-driving software technology, which is expected to generate over $2.1 trillion in revenue by 2030, according to some projections. The company will probably regain the lead on that chance when its fully autonomous robotaxi is released in 2024. Other automakers may need to wait a lot longer to develop this technology since it needs years' worth of real-world data. Then there are Tesla's other ventures, such as the production and storage of solar panels for homes, which are in such great demand that the company is finding it difficult to meet demand. Additionally, the company unveiled Optimus, a revolutionary humanoid robot that has the potential to completely transform the workforce at this year's Tesla AI Day. Additionally, there is the robotaxi industry, which has the potential to completely transform mobility. It is anticipated that Tesla's model will not require any human interaction at all, which has the potential to completely transform the logistics industry and revolutionize how we move about. Experts estimate that Tesla will likely produce cars at a run rate of 2 million per year, and Wall Street analysts project the EV company will make roughly $120 billion in sales in 2023. Therefore, provided that vehicle prices stay at current levels, Tesla's yearly revenue may surpass $1 trillion by 2030 if that production number increases tenfold. If this occurs, the price of Tesla stock will undoubtedly rise to the point where the majority of regular investors can no longer afford to purchase shares in the industry leader in electric vehicles. As of late October 2022, Tesla stock ranked among the top stocks held by Ark Invest, holding a massive 10.8% allocation in the Ark ETF portfolio. After this, be sure to subscribe to this channel for additional information on Tesla stock.